everyone, I'm Sanjana Uttappa and welcome to the sixth episode of the Fund of the Day. I take care of investor relations and portfolio management at Headstart. Today, we are here as part of Startup September, which is a month long celebration of the entire startup ecosystem, where we host different initiatives and programs spanning across different functions in the ecosystem, trying to add value to various stakeholders. The next 20 minutes, we will be diving into the Fund of the Day series. So, the objective about hosting this series is to help founders understand the philosophy and thesis behind various funds in the country so that when you're approaching investors, you can have a more strategic move and decide on which and who might be the right investor for you. Today, we have with us here Swarandeep Singh, who is the managing director and founder at Lykke Capital. Hi, Swarandeep. Thank you so much for joining us.
Hi, Sandra. Thanks for having me. Excited to be here.
Thank you so much. Swarandeep, I know you've had a wonderful journey as an operator turned investor. Why don't you walk us through your professional journey from where you started to where you are today?
Sure. So by academic background, I'm a computer engineer from NSIT, Delhi University, and mid into my role, four-year computer engineering course, I developed a liking for financial services, and that was largely to do with the fact that my dad is an independent stock trader. So like early on in my undergrad, I used to accompany him to a lot of budget and other financial related conferences. And he's still an avid reader of business and economic magazines. So we used to have 5 magazines like coming to our home on a daily basis. So over a period of time, I developed a liking attending and reading stuff. So while I was midway into my course, I realized that there are few firms that come to our campus for recruiting engineers. It could be for engineering or could be for non-engineering roles. And that's where I decided in my final year when typical placement season starts in any engineering college that I would want to ideally target a financial services firm. So I recruited for a few, but eventually got my role at CPN Global Markets, which is a tech or information technology provider to a lot of different stakeholders in the international financial services ecosystem. So a large chunk of it is commodities clients. So companies like Chevron, which are oil and gas, and a lot of regulators, insurance companies, banks, and companies like that. So I started my first role there, and I used to be associated with the client's trading desk. So that trading desk would be punching in orders or trades. But what would be the impact if those trades actually got executed would be something that our technology systems would calculate even before those trades got live or executed. So what would be that impact on our daily P&L and things like that. And I also started appearing for my CFA, Chartered Financial Analyst courses, given that I did not have a foundation in finance while I liked and did a few things. So that's how my journey started. And as I spent a year there, I realized I am more interested in the business side than the technology side. So a year later, in 2012, I joined BlackRock. It was still very new in India. And the particular department that I was about to join was financial markets advisory. That became a spotlight or a highlight closer to US financial crisis, 2007 and 8. It started, I think, a few years earlier, but it became a spotlight during those times. The reason being that Federal Reserve gave BlackRock a mandate where a few of the financial institutions which were failing, like AIG, Bear Stearns, they had to be taken over by Fed momentarily, and BlackRock was given the charge to make sure that those are eventually returned back. The public money that is being put there can be returned, and it should not be a distress sale because that will lead to the financial services ecosystem collapsing. So I think BlackRock took about 4 to 5 years to wind on all the entities or the vehicles that were created as a result of Fed taking over those. So that was a big part of my role. Then the very consulting style, every 6 months was a very different kind of financial services cases that I was putting on. So this was one major one. Then BlackRock was launching a new product in the fixed income space. So worked on that, and the reason I moved from there was that one, I was very interested in startups, and my role at that time was limited to helping them hire. Because I had a background being a student placement coordinator for my batch, so naturally had a lot of like recruiting related insider things that I knew. So that kind of translated, and I was trying to find a way where I can marry both these two things. One is love for finance and love for startups. So that's where I kind of figured out venture capital is the thing if you have to kind of do both. So started recruiting. But given I had not done an MBA, which is typically something that people used to ask for, at least back on those days, and I know like things have changed in the last decade, but yeah, at least back on those that was one of the major requirements. Secondly, I did not have a typical feeder background, which is a consulting, typical McKinsey, BCG kind of a consulting role, or you should have worked or started your own thing. I had neither of those, so it was a little bit hard for me. While I understood financial markets, but private markets are a very different beast. So initially had some challenge, but then eventually I think I got really lucky in a lot of ways. I cracked a Spanish VC that was investing in India. So I recruited, or I did interview with them 2 years earlier, but they ended up hiring somebody else. But I had a very good hunch, I would say, or intuition, that next time they want to add a member or maybe somebody is leaving, that I should be the one that should be picked, because I went very late into the process. Like I was among the top 2 or 3 candidates from India who was with them. So I learned Spanish in the meantime to a decent level, cleared CFA level 1, level 2. And the person who was hired, she left to pursue her MBA at Harvard Business School. And then they gave me a call that we are looking to like hire somebody now. Would you be interested? And that was a time when I was actually moving on from my role at BlackRock. I get some other offers. But then because this was my first interest or priority item, so I decided to take the role. I think that changed my trajectory significantly. One, because of being international. Secondly, coming more toward the venture capital, entrepreneurship, startup ecosystem. So I've been in this space for now closer to 8 years, since 2015. Did a few investments, exits, and then also have them raise a fund of funds to invest in pan-European geography. So they were selected. We were selected as one of the 6 investment managers in Europe to start investing in other venture capital funds, and that was born as a result of a policy change at European Commission level, where Europe wanted to become the next Silicon Valley, and basically kind of develop its infrastructure, ecosystems, and everything on those levels. So they became the anchor investor with a 50 or a 75 million euro check, and the rest of the money had to be raised externally from same set of people that would invest in directly in VC funds as well. So I think that gave me a lot of exposure, and the other. So I since I spent that time, did investments, exits. And our fund was closer to its investment period, which meant that we could not make new investments unless a new fund has been raised. And we were facing some roadblocks and challenges there, because India started kind of an accident for them, because given their Spanish, India was never in their radar. It came as a result of somebody pitching, and they're kind of getting into the demographics, the opportunity and all, and that's how India started. But by like the end of that investment period, Europe had recovered significantly from the crisis. So they were more interested in investing locally within EU than investing in outside India geography. Because in 2009-10, when the fund started, like given it was in crisis, everybody was looking to invest outside the region. But then things had changed in the next 6-7 years. So I moved on, and I started my next adventure, which was in sustainability and sustainable finance. That was another area that was very close to my heart, and still is. So like I joined Delberg's non-profit arm called Unleash, which was an early stage venture builder for people or individuals who are who might not be entrepreneurs right now, whether in the for-profit or the non-profit space, but they want to become, or they at least want to become entrepreneurs, even if not entrepreneurs. So so initially I attended that in the first year of inception, but then I liked that organization and what they were doing so much that I kind of spoke to them that I am interested and I have relevant background where I can contribute. So spent 3 years with them doing more of community management, acceleration management, and helping some of the incubated / portfolio startups and non-profit raise capital from different sources. So both grant money, impact investment money, and some money from governments and Fortune 500 companies that were interested in some of those ideas, which they felt could be plugged in. Then I did some course correction. I wanted to move back into investment, more commercial investment. So that's where I started my journey with Lykke Capital, which is actually pronounced in a Danish. It's a Danish word which means Luca, or and the English meaning is satisfied and being happy. So I started that about roughly 2 years back in March, April 2021. I've made about 10 investments since then, and I actually took up a role with one of my portfolio companies because that was again in the fintech space. Could leverage a lot of my skill set, which is in deal making, reaching out or speaking to founders, helping them solve their capital requirement issues and problems. So right now I lead partnerships for Recur Club, which is a fintech platform that does non-dilutive financing. So yeah, that has been my journey.
Oh my God, is what I have to say for that. Very inspiring. A lot of people often say that you have to be willing and open for new opportunities, and that can work wonders for you. I think you're a classic example for that. Thank you for sharing this inspiring journey with us. I also know that Like has a very strong global network. So, are you seeing an increased interest in global investors looking to invest in Indian funds or startups itself?
Yes, definitely. So the way Lykke Capital is structured is that it is more of a syndicate fund than a pure play blind pool capital fund, which means that there are individuals who are part of the syndicate or syndicate fund, and they contribute in their individual capacity. So a lot of Indian folks who are not living in India, they are working in global geographies. They are part of the syndicate, and they invest into Indian startup, given that the economic opportunity and the startup opportunity that India present, they want to be part of that. Right now, more in capital contribution way, and some of them who are able to devote some part of their time and bandwidth, they also want to be associated in whichever capacity. So each of them, or 50% of my members are actually somebody who have specific skill sets in say product management, data science, XVCs, X UI UX and things like that. So they've contributed those specific skill sets to startup that are interested in taking help from them, and capital and mentorship, but mentorship in specific area. The other 50% is more of operators, founders that are there, and they of course have more experience and more to share with founders. So that's how I am able to add capital plus say operating support to startups that I'm investing in, and that's the philosophy. So my other co-founder, he has been an operator through and through out since he graduated from college. He has only worked with startup, never seen a corporate till now, and does not want to, of course, see as well. So he adds more of operating experience compared to me. I do more of capital, hiring, things, and he does more of growth, performance marketing, SEO, referrals, and things like that. So coming back to specifically your question, so a lot of people who are getting onboarded on the syndicate and want to invest are people who are from India, living outside right now. They are making up their minds to come back to India with the theme that started coming back to India, but right now want to take exposure in a light touch manner through this being part of syndicates and taking exposure into startups, and of course contributing as well. So yeah, definitely there has been a greater interest since I started into from global side.
Yeah, so on that note, I just want to dive a little deeper into Like and the sectors you focus. So I know that you have a keen interest in commerce and fintech. So, what are some of the investable subsectors or opportunities within these sectors, commerce and fintech, that you can see?
So I would say like the way I have structured it least and the way it has come up, of course, are a result of that. So I've been more of sector agnostic, given that the stage that I'm investing in. So I typically do pre-seed, seed, and pre-series A. And my thesis is more on taking founder level calls and bets. That this is the right team or the right person to be able to solve the problem that they're solving, which means I cannot be constrained by sectors, more by the quality of founders and the founding team. But what naturally, because of the background, because of some of the sectors that I am more able to relate and also able to understand better, the result is that 50% of my portfolio is about B2B or SaaS, so 5 out of 10 companies. And the rest 50% is a combination of other sectors that, for example, my partner contributes to. So he has been more on the D2C consumer brand side and consumer tech. So he contributes sectorally more to those sectors. But I think talking about the next, given that I mentioned about sustainability and as United Nations Sustainable Development Goals, I have a lot of interest in that. While I've not made investment as such till now, I don't think I've found the right team or the company, or even if I found they were not at the right price or the right valuation. So I ended up passing a few companies because of that. But climate tech is something that I think we are able to see on a very day-to-day basis on the effects that it has. So climate tech is a big focus for me. Still not found the right team to back. But yeah, that is one. The other is e-commerce enablers. So I think e-commerce has, of course, has a decade-long, but a lot of enablers or tools that can make it more efficient, can help optimize the e-commerce happening. For example, reconciliations, helping set up subscriptions as an infrastructure, and a bunch of other things. So those are something that I look forward to. And recently, in fact, I committed to investment that is actually doing this, which is a video streaming as an opportunity to convert e-commerce, given that a lot of drop off at the cart level, lot of other ways drop off as well. So they are helping video to convert e-commerce.
Understood. And you also did mention that you are on the leadership team of Recca Club. So there's very less awareness around the efficient use of debt capital, especially for working capital needs among startups. So can you throw some light on debt as an efficient use of capital for startups?
Sure. So I think if I go back to my CFA days, there was a big theory on the right debt equity mix, which is of course something that public companies at least strive for. But when it comes to startup world, given that they're not mature, they're still trying to find their business model, product market fit. Nobody at the early stage specifically thinks about that very actively as well. But I think not all sources of capital are alike. Equity capital, grant capital, debt capital, each of it has its own purpose and use cases. So I think one thing which is missed massively is that for a lot of, say, risky experiment that you are doing early on, the right hires that you are doing, of course, have to be attracted with equity and equity capital. But a lot of very regular operating expenses, working capital, can be something that can be satisfied by debt capital. And of course, within debt capital, you have different products as well. And one of the recent or the most latest, I would say, innovations in that case has been recurring revenue financing or revenue-based financing, which means for companies which have a very consistent or a predictable revenue line and or cash flows coming based on those revenues, they can use that as a proxy collateral, not a collateral, but a proxy collateral to be able to raise capital and use that for their working capital needs, so that one, they can raise later when, say, they are on higher revenue, they can get a better multiple and things like that. So I think even at early stage, while you might not have a dedicated CFO or an account person, like founders should think about on which sources and which use cases of capital are there, and how do you do a efficient matchmaking for things which are more risky, outcome is uncertain, you use equity capital. But for things which have become very predictable, very certain, you already know return on your channels, working capital is something that can be used. So for in our case, the biggest theme is recurring revenues, both consumer and enterprise. So we are very big on SaaS. The other big chunk of companies and business model that we look at are B2B marketplaces, logistics, co-working, and tech services. So tech services for us is the traditional web dev and services that have been digitized. And last, D2C or consumer brands, we do that very selectively. We have a higher bar for those companies, given our thesis that smaller ones, which are not at scale, are more volatile and risky in nature. And given that capital deployment, we have to match or do a trade-off between the risk and return. So we have D2C, but that's one of the smallest sectors in our portfolio.
Understood. Thank you. I just want to shift gears a little. So looking ahead, what are the key trends or areas of innovation you believe will shape the startup or the venture capital landscape? I know there's a lot happening around climate sustainability, like you also did mention, and T2C is one of the things. So how do you think the entire landscape is going to evolve further, maybe in the next year?
Sure. So I think there are 2 or 3 major things that or trends that I see, and that is a lot of reason is also the maturity of the system. So I think if you look at, say, developed markets where venture capital has been in force much longer than India or Asia in general, there has been a rise, or there has been a prominent operator-led funds, which means that either those who are investing, they have started companies and exited them, and exit would be both sale, IPO, or also eventual shutdown, so that they can relate more to the founder problems. They can kind of add value from the operating side. I think that has been a shift to a small extent in India. Like since I started in venture capital to what it is now, I have definitely seen a shift, but it is still on a very small portion of funds in India that want to actively hire operators or ex-founders. I think so. I see that as a very big shift. I think the second one is definitely on sector-specific funds. So while I'm also sector agnostic, but I think there is definitely some merit or a lot of merit in sector-specific fund, because the kind of depth that you can go, and specifically given that I am a very smallish setup, not a full-blown fund in that sense. When you have sector-specific, you are able to go very deep, already do partnerships with a lot of ecosystem players that can add value to your portfolio companies. So there are a lot of merit in that. So I think that as the second big change or trend that would happen. I think more and more sector-specific funds would start coming. I think third, I would say, is the 220 structure that is talked about very actively in VC, which is 2% setup or management fee and 20% carry. I think a lot of funds have started aligning more with LP interest, where they're reducing their setup or management fee, but going higher on carry, or they're at least giving that option to LP that you can choose, say, instead of a 1.5 or a 1%, but a higher carry, maybe instead of 20 or 25 or 30% carry, so that it can align with LP interest. And given that if you look at the distribution of fund returns, the top decile or top quartile of funds are deriving significant returns, while the other part is what you call a laggard, that is trying to catch up, either just returning money or in some cases also losing money on a fund level. So I think aligning of those interests would start more and more, and this structure will slightly change.
Thank you for sharing all those insights. I have one last question for you. In one word of advice, if you had to give young entrepreneurs who are looking to pitch to you after this episode, what would it be?
I think VC pitching, I have an analogy of dating. That VC pitching is very similar to dating. It's not something that is lacking in you. It is just about fit. And to be able to achieve that, I think if you look at somebody's, say, investment thesis, current portfolio, interest that they mention on, say, various either social media platforms or like long form, short form content that they write, it gives you a sense whether this fund investor would be the right fit for you or not as a founder. Instead of, say, going and pitching to anyone and everyone, I think, like, even if you pitch to lesser, I know it's a pipeline problem as well, that there is a certain funnel where you have a universe, and then a few of those will be interested, do second level calls or third level calls, and eventually commit to your fund. So of course it is a pipeline problem, no denying that part. But I think more shortlisting that you do, which is in line with your thesis, sector, ticket sizes, geography, the better the outcomes that way. So while the universe might be smaller, but then there are higher chances of conversion or probability of conversion. So I think that is one where, so for example, I invest only in Indian companies, of course, including the ones which are incorporated, but largely it has to be Indian founders solving Indian problem. They can be structured or incorporate outside. So that is fine. But I get a lot of which are not Indian founders or Indian. Yeah, a lot of sector that I don't invest in or I don't know much about. So doing that homework or research, I think, is very important. So like we say, founder market fit. My one-liner advice would be like VC founder fit as well, where you see, or investor founder fit, where you see that investor has a very good fit with the sector, the problem that you're trying to solve.
That's very well articulated, Swarandeep. In fact, the entire objective behind us hosting this series is this, because we always produce so much content around how a founder should go about refining their pitch deck, what should they do. But we very few times do we speak about what is the right investor fit and how should founder evaluate the investors. Thank you so much. With that, I think we are at the end of today's session. But thank you so much for taking out the time and sharing those insights. Personally, I loved your journey. I think that's something very inspiring and very motivating. Thanks, Akash.
Thank you. Thanks for having me.
Before we wrap up, I would just like to take a moment to invite everyone to Head6, which is Headstart's annual summit happening on the 30th of September in Bangalore at SAP Studio. This will be a day-long summit with a lot of workshops, panel discussions, speaker sessions, networking, and much more. You might not want to miss out on this. If you have not registered yet, please head to Headstart's social media pages for the event agenda and the registration link. Look forward to seeing you all. Thank you so much. Thank you all for your time.